This is Martin from Secrets, channel for learning about trading and investing. Welcome to Markets Next Week, a weekly stock market analysis show where we try to understand what happened in the market from technical charts and try to learn from it and then plan for a better trade for the next week. And that's starting from tomorrow, or the day after tomorrow. Tomorrow is a holiday X. That's October 3rd, Tuesday 2023. Let's deep dive into the charts. Here we go. This is a weekly view, weekly charts. We were already seeing that there was multiple flat breakouts, rounding patterns in both indices, and we had a nosedive reversal that happened from the top all-time high levels on Nifty. Right, the Nifty also has got a very wide range bearish candle previous week. But look at this, what just happened last week was a pause. An indecisive stop, indecisiveness indicated by a small body doji candle on both indices. What you see there, right? So we are in the midst of a rally, and we had a sudden big fall from the top previous week, and then the following week, that's last week, we have a pause. Here's another view. We are in a parallel channel, and we have broken out based on the Fibonacci extension above the 78 Fibonacci extension levels in the north hit the resistance, and Banknifty hit the resistance 4 times, forming a double top after having hit the resistance of the Fibonacci 61 point resistance there. But both indices are well within a parallel trendline channel. This is a daily view. Daily view clearly shows that the trend line bottom is where the price is set, and Banknifty also is within a trend line that's clearly seen there. The bridge of that could be a worry, and we can also see that previous all details can be clearly seen. So we have the price jammed between the moving average resistance is 20 exponential moving average and 50 exponential moving average. Price is jammed between that. We have an inside bar that's inside the Thursday's big fall. Banknifty also inside bar, which indicates consolidation, jammed between the 50 and the 100 exponential moving average. Right. This is a candlestick view, clearly showing a small body indecisive candle. Banknifty absolutely dodgy indecisive flat close, week to week basis. Daily we have an inside bar formed inside the previous bearish engulfing. Right, so it's completely inside bar indicates consolidation on the short term daily charts. Both indices, that's what we see on the daily. Now we have the Bollinger Bands, which is saying us that we are again consolidating with the contraction on the bands on both indices with a bearish bias. So sideways consolidation what indicates. Let's just summarize the numbers before we move on. So if we have a flat close, that's 34 points down on Nifty and 115 points down on 27 points down on Banknifty. So less than 50 points down, flat close after reversal from the top. It's nearly 3%, 3.5% reversal from the top, and remember we are in a 20% rally. We have reversed in the last 2 weeks from the top. Now daily candles, we have positive 115 and 284 points on Banknifty. Right, Banknifty is less than 50 DMA exponential moving average, and 20 DMA is what price is close for the Nifty, below 20 DMA. Okay. So basically we have reversed from the top, and now it's consolidating. Changeable bounce cannot be rolled out from here, because this is a support zone. We've already seen that. It's at a support zone. So the support is the same zone from where the previous breakout happened. So this could act as support zone, bounce up from here. That's changeable priority bounce is possible. All the bands we already seen. So it all depends on how you will be able to hold on this. So basically, in daily charts and short-term charts, we know that this box is a consolidation zone. Right? price is making double top, absolutely range bound within that. So that's more scope for now. But question is, will we breach that 100 EMA? Will we breach that box and then further fall now? There's a gap support also at 9200 with 100 EMA is on it. Similarly, 43,600. That's a zone where the consolidation ends. Right? We will have already breached the 100 by that time. And if we breach that, could put the 200 exponential moving average profile support and bring an end to the consolidation. Or would it break down from here? That breakdown could be equal to the size of the consolidation, so that could be really, really big cut, and this could extend to probably right. What was so basically we moved up, went down, moved up, again went down. So what is happening? So we will retest this and hold this. It's a question. Let's look at the supports resistance numbers as well for Nifty. The first resistance above would be 1917, 18 or the 20 exponential moving averages there. Then 9700 could be a resistance. Rounding number, that is. Then you have 19878, no, 880. 19880 it's a gap, that's a resistance. And then 20,000 rounding number is a resistance, big rounding number. Then you have another gap, 20,150. After that, you have the whole time had 20,222. That's resistance on the Nifty on the upside, and downside you have the first swing lows that's coming at 19651. Then you have 19638, it's a which could be good support, 50 moving average zones, and then 50 moving average is near 19561 basically. Right, so 19600, 19584, 19688 are all print swing lows for support to come in, and 19492 is also a gap support. No, 19492, 492 is also previous swing low support. So then it goes to 19200, 19201.7. You have very good gap support. 19223 also, 19227. All these are supports before that, previous swing lows. So my support would be 19200. Breach of that would take easily to 19,000 rounding number, and this is also from previous swing lows. Right, so we have so if this so that exactly take it to the bottom of the consolidation, exactly where the 9227 EMA and 19200 gap, all this confluence is happening. So it could be very good support. Breach of that, as I said earlier, could be not that great for the bulls, right? Otherwise it may move up and down. So basically it's consolidated. Banknifty, the first resistance would be the 50 exponential moving average, which is 44,500, 44,765. Then 20 exponential moving average, 44,874 is the resistance there. 44,950, 45,000, 45,118, 45,411, 45,655, 45,782, then 45,906. This comprises of resistance on the upside, producing highs and gaps. Right. On the downside, you have first major support at 44,319. Before that, you could see supports at 44,500 zones as well, previous lows. So if 100 EMA is breached, then 44,182 supports can be there. 43,830 previous low, 43,592 single low, 43,367, and then 200 exponential moving average at 43,263 supports. So that's supports on the Banknifty resistance we already seen. Make a note of these levels, right? Take your time and then make a note of these levels. Correlate that with open interest, and then that's how we take long short positions. Moving on, we are trying to analyze the momentum and the trend. We have the weekly on the left side for indices both. So that indicates that Nifty has got the momentum intact, taking the support of the RSI 60. It is definitely fallen, but it's in the bullish zones on the medium term. There's weekly charts, but breach of the momentum into sideways had happened previous week on the Banknifty weekly charts, but momentum is not dipping, staying flat. And you have the daily momentum, which has already taken a slip into the sideways, has taken a support of the RSI 40 and then bounced up. So bounced up and rising, sideways and rising is what you see. basically momentum on the short term. So on me sideways rising on short term and bullish falling on Nifty and sideways falling on Banknifty medium term. Right. So trend indicator already indicates that there is a bearishness, but bearishness has recovered a little bit. There is a rising strength that's seen on the short term, but there is bullishness on the DMI positive part of the ADX, which is it is bullishness, but it's falling strength. So the trend is intact on the medium term. Short term also it has taken a several bounce. So the trend has improved. Momentum also has picked up. After the previous week's big fall, previous, I mean, last week or previous week, it was seeing some sort of pickup on the momentum and the trend, but otherwise, momentum on the short term has got the hit, and damage is not done yet. Not full recovery of the momentum has happened yet because the indices closely is what happened this week. So volatility was contrary to the price movement last week, where the price was falling down and volatility also was falling down. India VIX, that was what I was indicating. But this week, price did not move much. It's more or less flat, but had a bearish tone. But the VIX had risen up nearly 8%, and that was very volatile towards the week. Day-to-day basis, if you take, it was very volatile. It went up to 20% on the upside and some 15% downside. So it's very volatile. Finally, close to close basis, it was an 8% up move. So VIX is rising up, but it's still in the low volatility range. It has not risen above the 13-14 that range. So VIX is still in the low volatility range, but it has spiked up when the market closed indecision, contrary to what it happened last week. Operators showing Friday's futures operators showing short covering bottom, which is bullish in nature. Friday, thumbs up. Operators for the October 4th and 5th Nifty in the Bank weekly charts are showing the book call ratios. Kind of not bullish enough, but not bearish either. 0.85 on Nifty and 0.90 on the Bank. Right. This is a summary. So look at the resistances out there. The range is turned narrow, 9600 and 9800 for the Nifty, where the highest put and call rating is seen. 9500 and 9700 is second highest put and call rating. And 44,500 and 45,500 narrow range, where the highest put and call rating is seen. 43,000 and 46,000 wider range, 2,000 points, where the second highest put and call rating is seen. So support resistance is seen likewise. Right, and here we go. Let's try to understand what happened across the sector. Across the sector, basically some recovery, as seen in the price, has happened, but otherwise none of them are bullish enough to take long trades. Right. So big crackdown happened in the IT. The IT was supporting a little bit, it's moving up, but it's resistance following the market down move in the US markets, 3.35% down. So that is the only sector that got really hit last week. Otherwise, the cross sector down move happened previous week. But last week, it was only the that hit that. That was all closing more or less flat. And some recovery has happened. Reality, you can see that it's 2.5% up. Pharma also recovered a little bit, 2.5%. But auto and FMCG was like kind of flat close. Reddish flat. Indices close is what you see, of course. Medium term bullishness is seen in metal and auto and pharma. And reality also. The medium term bullishness is seen in the index, can be seen in the sector-wise indices as well. On this. So, but medium and short term, both bullishness has not come back. Small recovery has happened. IT got hit back. That's what the summary of the sector was. Look at what IT had a huge gap resistance and exactly the same place it got hit. Right, momentum it slipped, but still it's in the bull zone, so medium term. Metal all-time high hit, still in the bull zones, maintaining that. Auto from the all-time high, small reversal, momentum is bullish. Pharma after a fall, bounce back immediately. Bull zones, divergence, southern momentum bullish in nature. FMCG all-time high, maintaining. Medium, so medium term, everything is looking fine. Everything is looking fine in medium term. All the indices remain in the bullish zone, so momentum medium term. Reality got hit, recovered. Divergences can be seen from all-time high nearby levels, consolidation, green close, momentum bullish. So across all the sectors. We see medium term, nothing much. It might have got hit in the last 2 weeks and moved here and there, but momentum is intact and price at all-time high nearby levels. Bull sorts. That's about the industry sectors, different sector indices. What we try to understand. Moving on, we'll try to understand the index heavyweight stocks, the stocks that contribute maximum to the indices. HDFC Bank, the one that's fundamentally strong but technically falling. Huge volumes of buying, huge volumes of selling, a lot of things are happening after the merger. And once again, you're seeing a breach of that consolidation zone. Looks like it's heading towards 139. So, unless it does not breach this trend line, it's a long trend line from the COVID times, and that seems to be getting breached. Right? From one consolidation breakdown, it's getting into another larger consolidation breakdown. Momentum is still not slipped in the bear zones, but holding on to the RSI 40 at the support on the downside. Right? So, now this may be time for SIP buying, is what I would say. So bank is fundamentally strong, has been in the bear zone for a very long time, and for obvious merger reasons, a lot of volatility is happening. Right? You may never get a chance once it goes beyond the 1,700. Definitely is not going to break this 1,300 unless there's a big market crash that happens. Contribution of HDFC is more than 15% or something. So if the market crashes, HDFC will crash. But while the market is steady up, it continues to be bullish zones, and HDFC is falling means that's a buying opportunity. Unless there is serious fundamental troubles, that's get to know. And again, after hitting the top, seems to be falling down. Momentum also slipping the sideways already. I see the bank slipping the sideways at the top, trying to hang on there, consolidating this wedge. This is an ascending wedge, and you'll have to keep a close watch if that is getting breached. That's pretty long wedge. That's there. Right. Basically, at the top, volumes below is a May, but no. So basically, all these are the three big heavyweights that contribute maximum. HDFC Bank, Reliance, ICICI Bank. All of them are sideways. Selling is what is happening. Selling is happening in all these stocks heavily. That's what the Fyers are selling these stocks, very clear. So, Infosys hit the resistance. There's a gap up there. Even before that, it hit the resistance. Indices fall. Momentum has slipped sideways. TCS holding on the bullish momentum, but again, a red, white range bearish candles in there. Crack Bank consolidating up and down. Momentum sideways. ITC after the big bull run has slipped in the sideways and facing resistance has consolidated. So basically all the index heavyweights are in the sideways zone. Okay. That's why market is not. So selling is intensely happening in that heavyweights. 7 healthy stocks or 7 stocks. Look at this FII participation. 8,431 crores of selling in the cash market. Every single day they were selling, not even a single buy. So 10th consecutive week of selling in the FII is trouble. But they tried to buy and equalize at 8,143 crores of buy. So net longs and derivatives also FIS moved down. So FII selling is a trouble. Continue to sell is a big trouble. Global markets and global currencies and commodities is what we're trying to see. Now, so the rupee is weak. Used INR currency pair 0.13% up, 83.5 at the top. Rupee remains to be weak. Dollar index 0.54%. Dollar is strengthening. 106.17. Cup and handle breakout. What you can clearly see the cup and handle breakout. And down here we have used INR. Just got ascending wedge. So every time it tries to break out at 83.5, there's intervention that happens, and then hold on. Right, so rupee is at a weakest level, and USD currency pair, USD and ARC currency pair is rising up, and dollar is also spiking up. Now we have crude, which is at the top of the channel. Almost seems to be almost breaking out of that about 93.7. So that's a concern with a falling rupee and rising crude. Economies like ours, which are oil importing countries, will have problem. But look at this gold, which is hedging instrument, has taken a big crash fall, big fall, 1843 cents, coming out of at the bottom of that cup and handle, and it has breached the momentum support zones of RSI 40 also. So gold crashing. That's kind of strange. Means I don't know the fundamental reasons for that, but gold is a hedging instrument, right? And market is so the gold is not getting bought, and people are not thinking that gold is anymore safe for haven, at least in this very short term. That's why it is falling down. So money is moving elsewhere. Use bonds, which is going towards all-time highs recently. Or speaking of, could be the reason. But yeah, the crash in the gold is what you see there. So gold crashing, breaking out of the oil, weakening of the rupee is what you see in the global commodities, right? Global markets use indices. Basically, you see Dow Jones hit versions of the descending wedge and then has been falling down since then. Momentum is sideways. Trend is bearish in nature on the medium term. Nasdaq also has been falling down, but it just managed to close in this Doji. S&P 500 also is close to red. So to just summarize, you can see that it's a 1% down move, and an average we see. So US markets are close red, and gold crashed, and oil spiking up, and rupee is weakening with dollar rising. So that's what that is saying us. Now, that's about the analysis. And let's just dive into some actionables. Two stock picks for the next week. One is Landmark Pharma, Dalmia from the cement sector. The other one is Pharma. So Landmark is having a inverted head and shoulder pattern. Inverted head and shoulder, which is already broken out. And there is also a parallel channel breakout that's seen there before that breakout of the head and shoulder. So clearly bullish. Volumes are above SMA. Momentum is bullish. Trend is also bullish and rising. Good risk reward can be there towards the all-time high. Right. At least 1:2 risk reward. Dalmia with very good volumes. There is rounding pattern breakout. Reasonable risk reward. All-time high nearby levels. Just more puts tight stop losses and then trade and wait for the all-time high breakout. Moment was taken a range shift from the sideways to the bullish zones and bounced up, confirming the bullishness. Trend is bullish. Volumes are extremely good, so that's why Dalmia Barrel and Landmark short swing trades for the next week or a couple of weeks. Our next action is on the Nifty weekly option strategy. It's a Batman strategy which is completely hedged. Additional risk reward, probability profit is good, range is also good, right? And it's completely risk defined, right? That's great strategy. Basically, you're selling inside hedges. You're buying hedges and selling for OTMs and then taking hedge portions on both sides. That's a 1:2 ratio. So you sell 2 and then buy 1 and then hedge the remaining 1. Right, so the range is, look at this. The assumption is that the market is not reached 19400 from the 19650 kind of zones now, and neither is it likely to break out and hit the 9900 because it's consolidating. Right, so if you're exiting before the last day of the expiry, one day before that, if you're looking for a 1 to 2%, this strategy can keep constant profits every single week, even though it may not be that big. That's a weekly option strategy that we talked about. Now let's just wrap up. So we have an indecisive close up, right? Nosedive week previously. So basically, we're reversing to the top. 3.5% reverse has happened, but remember we are at a 20% rally of up now for a breakout of multiple flags and downing patterns and all that. But FS is now selling continuously for 10 consecutive weeks using dices of red at resistance. Rupees weak, rising. Oil prices are rising. Candlesticks are bearish pattern. Momentum has fallen. At least in the short term, we're talking about. And put call ratio is not that bullish yet, and Bollinger Bands are sideways. So basically, we are consolidating and in a sideways, but we have still hope that it can further fall down given all these factors. See, big bonds is what the bulls have. So markets are rose from the top, and it is supports of the moving averages and consolidation supports down gaps and all that is there. So it may be heading towards 3 months of consolidation, double top for all that we already seen. So it may be heading towards the bottom of it. There's some more space to come down. I need 200 zones and then 600 zones for the Banknifty. So that's why I have a view of neutral to mild bearish view for the next week. Remember that the global gives are great inflation worries, interest rate, and all this war and all this uncertainties are still there. So anytime there is a big black swan, all these views gets negated, and then it can be a big red now. So to be cautious, always have hedge version. So level for the next week is 19,220,000 Nifty. 43,600 is 46,090. So this 219,000, 44,000, these are all critical zones. We should breach the trend completely on the short term, and medium term also is turned to sideways if those levels are breached. So play it safe. Have hedge versions if you're carrying for 1%, all right. Don't go for naked shots or naked buys. Protect your capital. That's all. Protect your capital. Reduce your risk if this week is further spiking up towards 20 or something. No. Portion size cut lot and then have its portions. You can always use this time when the market is correcting as happy more investments. You can also have rental incomes from strategies like cash market puts and covered puts and all that. So all these option strategies have a separate video, separate playlist on the channel, and you can check out that. Right. So that's all I have. So the social media post that comes in regularly on technical analysis and all of these channels. So subscribe to that, and then if you're watching this and don't subscribe, please subscribe and share to your friends so that more people get to see this video and like if you like the video, the content, and then comment and give your feedback for us to improve and share to our maximum. Subscribe and like. Thanks. Happy trading, happy learning, happy investing. Bye.